Hello everyone, I will begin our presentation today by briefly explaining MFRS 8. MFRS 8 or Malaysian Financial Reporting Standard 8 is a standard that requires a listed company to disclose detailed information about their operating segments. This segment refers to different parts of a business that generate revenue and incur expenses. MFRS 8 mandates disclosure of key details like segment revenue, profit, asset, liabilities, and other relevant information. The main objective of this standard is to help users of financial statements such as investors and analysts to get a better understand the nature and financial effects of a company's operations and the various economic environments in which it operates.
One of the central ideas in MFRS 8 is the Chief Operating Decision Maker or CODM. So who is the CODM? This is the person or group of people responsible for allocating resources to various operating segments and evaluating their performance. In practice, this role might be held by the CEO, COO, senior management team, or even the board of directors, depending on how the company is structured. The CODM plays a strategic role in shaping the financial outcomes of an organization by deciding which segments receive investment or require changes. To bring this closer to home, let's look at real examples from Malaysian public listed companies. At IHH Healthcare Berhad, the CODM is Dr. Prem Kumar Nair, the group CEO. Meanwhile, at Petronas Gas Berhad, the CODM role is held by Abdul Aziz Osman, who is both the managing director and CEO. MFRS 8 also outlines two main types of segmental reporting. First, product or service segments. These are grouped based on the type of goods or services provided. For example, a company might report separately on its retail, manufacturing, and service divisions. Second, geographical segments. These are based on the physical location of customers or assets such as different countries or regions. Let's now look at real-world application of segmental reporting using Petronas Gas Berhad as an example. So for product or service segments, Petronas Gas reports on gas processing, gas transportation, regasification, utilities, and for the geographical segments, it distinguishes between Peninsular Malaysia, Sabah and Sarawak. This dual-level segmentation gives investors deeper insights into where the business generates revenue and incurs costs. So this is the example segment reports, which is the visual snippets. So let's first look at the snippet. So in this format, a company categorizes its performance based on its nature of its offerings. For example, a company like Petronas Gas might report revenue and profit separately for its gas processing, transportations, regasifications, and utility service. This allows stakeholders to evaluate which business units are the most profitable or require strategic attention. Now let's look at a geographical segment report. Here, the business is segmented based on regions or locations. Using Petronas Gas again as an example, the company breaks down its operation between Peninsular Malaysia, Sabah and Sarawak. So these types of reports helps users understand how location affects performance, especially when external factors like infrastructure, regulation, or customer behavior vary by region.
Next, I will briefly explain two key benefits of segmental reporting under MFRS 8. First, it provides enhanced transparency and better decision making. Users can clearly see how different segments of a company contribute to its overall performance. This clarity helps investors and analysts make a smarter financial decisions. Second, it helps users understand a company's exposure to a different economic environments. Each segment may face a unique risk and opportunity based on the market it operates in. Segmental reporting gives users a clearer picture of how well the company is diversified. Now, let's look at each benefit more closely using actual data from a listed Malaysian company that we have been chosen, which is Petronas Gas Berhad. Here we can see a segmental report snippet from Petronas Gas Berhad. Let's focus on the gas processing segment. In 2024, this segment generated RM1.87 billion in revenue and RM801 million in profit. This information tells users how significant this segment is to the company's performance. With this level of transparency, investors can make more informed decisions, for example, whether to invest, hold or sell shares based on the segment performance rather than just a total company figures. Now, let's look at the second benefit using another part of the same report. The utility segment generated Rm 2.11 billion in revenue, making it PGB's highest contributing segments. This shows that Petronas Gas relies heavily on this particular segment. By revealing this, segmental reporting helps users assess the risks and returns associated with different parts of the business. For example, if the utility segment is exposed to changes in government regulation or fuel costs, investors can evaluate how such risks might impact the company as a whole.
This standard is used by the company for preparing financial reports for a shorter period. It usually in quarterly or semi-annually. This report is unaudited but still reliable for investor and stakeholder in order to track company's performance during that time. The company can choose either use of complete set of financial statement or condensed set of financial statement. If they use condensed set, there is minimum component on the financial report, which is condensed statement of financial position, profit or loss, changes in equity, cash flow, and selected explanatory notes. Next, selected explanatory notes, which only focus on material updates in financial statement, like constantly accounting policy qualification, audit opinion, seasonal or cyclical business effect, and etc. For the recognition, company must use same accounting policy as they do in annual financial statement for make it consistent and comparable. But if there is changes, it must adjust the prior interim period. Sometimes, company earn more revenue and pay high costs in certain event. Thus, it must be recognized in the period it actually happened. Company cannot record early or delay the transaction in other quarter for reflection of true performance. Some expenses, like advertising, may not happen every month, so it should only deferred or record earlier. Because interim period are shorter, company may not have full information, so it allows them to use more estimation like tax or depreciation. Now, we look at advantages of applying MFRS 134. First, timely financial information that companies provide financial up to date, so the investor does not need to wait end of the year for making decision. Second, since company use same accounting policy, it becomes easier or enhanced comparable of the performance. And third, MFRS 134, it helps company align with market expectation through regular updates, also build trust and give confidence that companies is transparent and well managed. Now we move to significant event and transaction. We had choose IHH Healthcare as our reference. We noticed that after reporting date, there is 1 billion put option in Aguilar's diagnosis. This has material effect on IHH Healthcare financial position and potentially impact the cash flow.
Next, I will explain another significant event disclosed in the Q2 Interim Financial Report of IHH Healthcare Berhad, specifically under the Material Litigation section. One important case involved Ascot Health Institute and Research Centre Limited (EHIRCL), which is an indirect subsidiary of IHH. In this case, the Delhi Development Authority (DDA) in India terminated the lease on the land where the EHIRCL hospital is built. After that, DDA also tried to evict the hospital from the land. EHIRCL brought the matter to court. The Supreme Court of India in 2019 cancelled the eviction notice. However, the case is still pending in the High Court of Delhi, which means the final decision has not met yet. Although the company's lawyer advised that EHIRCL has a strong case and no changes were made to the financial statement, as there are no changes in contingent liability or contingent asset. This issue is still considered as a significant event under MFRS 134 because it involves a material legal risk. If the hospital lost the case, it may affect their asset, operation, and future performance. Now, I'm going to present about the interim financial reporting of IHH Healthcare Berhad. The accounting years end on 31 December each year, so basically they have 4 quarters. The interim report I'm using is for Q2, which cover the period from 1 April to 30 June 2024. According to MFRS 134, every interim financial report must include a minimum set of financial statements. This includes the statement of financial position, statement of profit or loss and others comprehensive income, statement of changes in equity, statement of cash flow, and also notes to the interim financial report. Let me explain how the reporting periods are shown for each statement. For the statement of financial position, the current interim reporting date is 1 January to 30 June 2024, which is 6 months. Meanwhile, the comparative figure is end on the previous financial year, which is 1 January to 31 December 2023. For the statement of profit or loss and others comprehensive income, the current quarter period is 1 April to 30 June 2024, which is 3 months. As a comparison, the figure is the same quarter last year, which is from 1 April to 30 June 2023. Then we also have the cumulative period from 1 January to 30 June 2024, which represent the first 6 months of the current year, and the cumulative figure for the previous year from 1 January to 30 June 2023. For the statement of changes in equity, the cumulative SOCHE for current financial years to date is 6 months from 1 January to 30 June 2024. The comparative SOCHE of is 6 months from 1 January to 30 June 2023. For the statement of cash flow, the cumulative statement of cash flow for current financial years to date is 6 months from 1 January to 30th June 2024. The comparative statement of cash flow is 6 months starting from 1 January to 30th June 2023. The conclusion, by including both the current and comparative periods, the interim report gives user a better pictures and performance throughout the years compared to the same period in the previous year. This is important for users like investor, analysts, and management who want make informed decisions based on updated financial data. That's all from us. Thank you.